I'd like to introduce my guests, starting with those joining online. So Jesper Carvalho Andersen, he's an investor and serial entrepreneur with a lot of mergers, acquisitions, turnarounds under his belt. So I'm really keen to hear how Fintech industry looks like in the eyes of the investor. Then we have Douglas Mackenzie, who is a serious producer and host at Fintech Finance. So Douglas writes, or actually shoots, videos about fintechs and does a lot of top-level executive interviews. So who else, if not Douglas, knows everything what's there to know about fintechs from a holistic perspective, and I'm really looking forward to hear your observations today. Then in the studio with me, we have Vytautas Karalevičius, who is a co-founder of a number of companies, Bankera, I would say digital challenger bank, SpectroCoin, which is a cryptocurrency exchange, licensed electronic money institution Pervesk. And recently, Bankera has won one of the 6 categories in the hackathon organized by European Commission, EU versus Crisis, with their funding solution for SMEs. So I'm sure that Vytautas will tell more about the solution for us today. And Kęstutis Gardžiulis, who is the founder and chief innovation officer of award-winning financial software company Etronika, most famous, I guess, for your omni-channel banking solution and loans origination system. And I know that you are very keen observer of fintech industry trends, so very much looking forward to hear your views. So without further ado, let me start, and I'd like to kick off with the kind of warm-up question. Before the crisis, I guess it was kind of common belief that fintechs are kind of more flexible, more adaptable, quicker to adjust to different situations in the market to shift their business models. Now, looking back into the COVID-19 crisis, would you say that that's the truth? That's the fact which we could confirm? Maybe I'd like to direct this question to Jesper in the very beginning.
Thank you, and thank you for allowing me to be here. I think it's an excellent question because in these complex times where we all face limitations, new limitations on a daily level, the digitization of the world has definitely given an incredible opportunity for fintech in comparison to the banks. I think yes, the answer is yes to your question. I think fintech in many ways, in many situations, has taken this opportunity, has proven that they're ready for it. And especially, it's always easier with a good comparison because we have over these last 3 months seen the panic within the traditional banking sector and seen the bank really abuse situations, especially for SMEs, where they have suddenly come out and questioned long-standing loans and asking people for written responses to how are you going to recover your current losses. And this is at a point where nobody really knew what was going on tomorrow. Nobody knew when the lockdown would be open. Nobody knew what was going to happen next. So I think in between the two, that we have on one side the fintechs that is born as a digital entity and the traditional banks that just did not react well to this situation.
Vytautas, would you agree? And also maybe now it's a good opportunity for you to comment on your solution, what you have developed during the hackathon.
So yes, I would agree, but also I think in general, there was not so much innovation during the lockdown because it was too short. And for innovation, especially in finance and technology to happen, you need more than 3 or 2 months. But I think the fintech, as we know it, not like, because fintech is a very wide area, but like fintech, as we know it, about the business who are facing the clients online and they avoid the brick and mortar chains and so on. They're already prepared for the kind of a lockdown scenario when people don't need to have a physical presence, they don't need to visit a branch, they don't need to use cash. And I think it was a great kind of like a great adoption of fintech solutions in general market, as before e-commerce and so on and so on. And I will actually like to comment on the point about that SMEs were left over from the government support, because, and especially the SMEs who were not leveraged extremely well, because like if you look at most of the stimulus packages to help economies to survive their lockdown, it was more or less given to prolong the existing outstanding debt obligations, like not to help, and also help the banks to actually not to have like a bad debts at least for the next 6 or 3 months. And actually, the companies who actually were not leveraged, didn't get like the outstanding debt, they actually were hit the hardest, because now it's very hard to get a new loan because the financial institutions are neglecting to get a loan. And I think that's the place where fintechs can come in and actually coming in. Despite from our solution, we also like solutions when people are issuing their prepaid vouchers online on the fintech platforms, when you can actually come back to the restaurant or bar later on and use that voucher to buy a drink while giving the cash now. And we also looked from Bankera side, we also looked for a similar solution. So we wanted actually to fix the potential breakdown of the supply chain at the earliest phase, where the retailer is actually not able to pay the suppliers, and the suppliers are not in the motivation to do that, but we cannot provide the cash to them because they're also like a short of cash. So we develop a solution when we issue the loans by the guarantee of both the supplier and the buyer, trying to fix the supply chain at the earliest phase, and like giving motivation of all the participants of the economy to try to wait and prolong until the lockdown is over, or we transform the economy which is sustainable in the case of lockdown, if we have to say for, let's say, next like 2 years or 5 years, because we still don't know.
Okay. Thanks. So is your solution which you have developed for this hackathon, is it now live and kicking? Are you was it developed only for the purpose of the hackathon, or do you plan to go live with it and to keep it running?
Yeah, so the hackathon was actually a good exercise for our company to make things quicker inside our house, because the lending, especially for the SMEs, was always in our roadmap, the next thing to come. And the hackathon of the situation is a good opportunity for us to enter the market. So actually, I think we saved at least a couple of months by building the solution, and we're expecting to be live in July. So the hackathon of the situation actually was a good pressure for us, for the company, for the team to focus and to deliver it quicker than we were planning naturally.
Okay, thanks. All right, so I guess SME lending was one of the areas which popped up during the crisis where fintechs could innovate and develop their solutions. What else? Douglas, I mean, you meet a lot of executives, you do a lot of interviews. What else do you see? What sort of innovations or new business models, new products have you observed during these your meetings with executives?
Yeah, so from my perspective, I guess it wouldn't really be so much as new technology, rather finally putting in place existing technologies that maybe should have been leveraged a couple of years ago. I've seen a lot more impetus in cloud-based technologies and customer-facing customer experience technologies and fintechs coming forward. And that's kind of pushed itself as well, I'd say, into a lot of the kind of smaller fintech banks as well. Moving into going back to the lending solution as well, I've started to see a couple more fintech banks like Varengold look into actually starting to create lending suites that are far more capable and based off cloud-based solutions and marketplaces that maybe should have been leveraged by some of the high street banks and other fintechs earlier. So I'd definitely say, from that perspective, cloud-based technologies and machine learning, especially to to really mitigate some of the risk that the fact that numerous organizations around the world are now working from home, especially payment fintechs. And so the KYC and AML regulations, they still need to comply. So I think we're going to see a stronger kind of investment in terms of cloud-based technologies and KYC technologies.
Okay, thanks. Kęstutis, would you like to elaborate more on that? What are your observations?
Yeah. Actually, it's very interesting. If we are comparing the previous crisis, which was in year 2008, actually, all the banks were blamed after that they built this crisis. Now the situation is quite difficult. Banks have a lot of liquidity and they are much more prepared, of course. But I see that in the nearest future, the banks will be judged by their actions, because now we see the rise of overdrafts and other fees for services, especially directed to those companies which are in trouble, and especially SMEs. But SMEs in previous times as well was something that everybody were talking about, the SMEs as a segment, but nobody had right tools or right approach or how to serve those SME companies. It was quite a difficult actually segment in the market, and the same is now, especially when they face a lot of problems. But if we talk about the readiness and preparedness towards new crisis or this current crisis, yes, all the fintechs and all those smaller companies are much more prepared from the organizational structures, maybe from the organizational part of their business, so because they are agile and they are fast and they have new infrastructures, but they are lacking trust, maybe, because we saw that a lot of clients during this current crisis moved back to incumbent banks and to the safe haven, because they are still alive and they are big and they will not fail actually. So we see this part of movement, and when it comes to innovations, we see a lot of interesting stuff, actually. Those small startups, of course, jumped into the lending space, or helping governments to deliver new funding packages and etc. But on the other hand, big players like Amazon, Google, now entering the same fintech space, and they are not targeting the banking sector. Actually, they will not become banks, but they are going to become, and they are becoming actually now, a new banking technology vendor. And there will be a dramatic shift in the coming years, I guess, that when Google, Amazon, and others will start to provide, and they already are doing this, providing technology and platforms for banks. There is a very interesting topic to talk about these big players as well.
Okay, thanks. So basically what I hear both of you saying, that not so much groundbreaking new innovations, but rather acceleration of certain trends which existed before, right? But they were kind of accelerated during the crisis, and maybe some shortcuts were made, and companies faster implemented their kind of ideas and technologies, maybe, in order to, protect themselves or to capitalize during this crisis, right?
Definitely.
Yes, right. Because COVID crisis acts as a catalyzer. All the bad ideas and not sustainable business model will fail, and failing faster, and the good ideas and good sustainable business models are going to rise much faster as before.
Okay. But let's then explore this a little bit more. I mean, okay, not so many maybe groundbreaking new innovations, but then anyway, I think it's noticeable that the market for fintech has kind of expanded a little bit, right? Okay, probably we have reached more unbanked people. Probably we have solved number of issues in financial inclusion areas, right? When people were forced to order groceries online or food online, I think digital payments went up. Well, not so much maybe in volumes, but actually new customers, new small businesses adopted a lot more of these solutions. Would you agree?
Yes, I would agree. But also, I'd like to make another point.
Okay.
The point is, I think, as we all agree that, Fintech was already prepared for these circumstances, even we never thought about that. But, Fintech was ready for the lockdown and for social distancing from the client perspective. But there's also another perspective in each business is the employees and back office. And I think, at least, from my company's experience, and I think it's for all the companies, what was the biggest kind of challenge and the change in the culture was actually the remote work, because Fintech was not the area in which you actually can allow the remote work at high scale because of the security issues. So I think a lot of essential cybersecurity things have been done in the last 3 months just to enable the remote work, and I think that was kind of one of the main innovation adoption of innovation to the fintech, not adopting the fintech or by the clients.
Okay.
So I think the cybersecurity and remote work and that change that now companies will be more flexible to hire people in remote locations in different offices, not trying to have everyone in house to have this physical firewall, physical protection. I think there's going to be also the change for the industry itself. Okay. So that's something what probably has changed for most of the companies over the last 3 months from back office.
Yeah. All right. Have we seen any new... Douglas, would you like to comment more on that?
So, I mean, I've got an example, actually, and I brought this up in an interview I had a couple of weeks ago, and talking about working from home has been so important for everyone, but it's really shown how the fintechs have actually succeeded more in better ways and more ways than a lot of other verticals. I was speaking to a Mexican fintech bank, Klar, and they were able to completely put their entire company working from home within a day. And I think that comes about because of people in fintech are typically very tech savvy, and as a result they can action these far quicker than maybe many other variables. So if we are the topic of the panel is to discuss how well fintech has done, just from that anecdote alone, I think that's a good sign showing how flexible these fintech banks at least can be, despite maybe some of the other larger fintech banks like Monzo, for instance, struggling to kind of mitigate the fact that they mitigate their scale, and how far they had come in the time period over the last half a decade, for instance, to where they are now, shows that potentially they've almost become like a legacy bank in a regard. Which is unfortunate, but obviously, I think it shows the fact that the fintech banks have done pretty well there.
Okay. That brings us to maybe slightly different question, slightly off topic, but Jesper, I wonder if you could help me to understand. So, before the COVID crisis, money were kind of pouring into the fintech industry. It was enough to have fintech written somewhere. Okay, pouring into the fintech industry, but now the situation is what I hear different. We've seen a trend already slightly before the crisis that both volumes and number of deals in the fintech industry was going down. Now, I wonder how this COVID-19 crisis will affect investors' mindset. And Jesper, would you say that in the future we will see less of the fintech startups and only those who have already developed substantial customer base and probably have sufficient income will survive?
No, I think as you also just talking about just before I fell out, but what has really happened in this, what I find as a dramatic change is not only has market shares changed in terms of consumer loans, etc., but it might not be many percentages that we're talking of now, but it's really a dramatic change in terms of tendency, and especially in terms of trust. As you also talked about, this symptomatic change of now suddenly it is politically correct with remote work, which was before COVID-19. It was something exotic for us in Fintech maybe, but for the general consumer it was, in B2B it was something that was considered not normal, and suddenly now it is normal. This trust to Fintech and other entities has really changed. So that means that with the manifestation of market shares, with the change of behavior, and you will see that this will drive more investment into fintech for sure. Personally, I'm looking at more maybe long-term opportunities, such as where do we see the next credit bureaus popping up? I see it both in Asia and in Europe and US, tendencies to data-driven businesses which are fighting to take that space. And I just think that this has really given a further strength to what before might have been generally known investor circles, that fintech is still to come, and I think with COVID-19 it is here.
Okay, thanks.
Can I follow on from that?
Sure, Douglas.
Just in terms of the following on from Jesper's talk about trust, I actually got sent a study earlier today. Literally today, which was brilliant for me, shall I say. But within the study, they found that a lot of technology companies had found that by working from home religiously and unanimously, they'd found an increase of a rise of productivity in software development of 30% within their organization. And I mean, that is a huge increase in 3 months. And I'm sure a lot of other organizations and a lot of other industries and verticals would be jealous of that. The one thing that they did find is that new software, big kind of releases, suddenly became a lot harder to do. But it was what I found really interesting was that notion of trust, and the fact that people didn't have to commute or spend energy going to various different places or interacting with other people, being distracted by other people, led to this 30% increase in software development times. So I think that certainly was a really interesting stat I pulled.
Mm-hmm. Okay, thanks. So it sounds optimistic, I would say, what you guys are saying, that we should not see any freeze of funding for fintechs in the future due to the crisis, but rather on the contrary, probably this area is very attractive, and as it develops, it will attract continuous investment. That's good to hear. Maybe a question to Vytautas. You are a fintech company. What sort of opportunities you still see in the current situation, or kind of you maybe have certain regret that you have missed? Maybe, if you knew that this would continue for another half a year, this lockdown, would you do something different in your company? Would you go into certain new product areas, new partnerships?
I think regarding the product roadmap, I think it would be more or less the same, because still there are things you want to do quicker, but just because you have a bottleneck of development and so on, you cannot make faster. But I think regarding the remote work and the office culture, but I think especially this beginning of this year, we had a lot of the efforts put on the finding new office and so on. And when we had the lockdown, we eventually found out that it was just more or less a waste of time, because we actually are also working much more efficiently from home, because we, as I say, we have less office drama, because usually when you office you have small things, you have something is missing from the kitchen, etc., etc. And when everyone's working at home, you actually are more work focused, and I think people are happier because they can spend more time with families, so on. Because I think you want to spend your time with your colleagues professionally, but usually you're not always seeing them your best friends. So actually having this mix when you have a coffee break with your family, with your kids, but you have your professional environment with people who are very competent, and you can just switch on your computer and just log in your room, and then you can just leave in 1 second back to your family. I think that's actually what empowers people and makes them love the job more and makes them more effective.
Okay.
On the other hand, yes, I think what the opportunity which was probably missed by us, but just missed because of you cannot do everything in one day. It's actually more about focusing about online payments and payment processing, because the lockdown was actually a huge potential for the new e-commerce and so on. Especially in March and April, we saw a lot of shops getting online in, let's say, very old school ways, when we're just taking orders on Facebook, and then we're trying to build the e-shops in parallel, and which are rolling down now. So I think that was one of the opportunities we missed.
Okay, I see. Thanks. I'll take one question from the audience. So the question is as follows, that most innovations, especially tools which help dealing with COVID-19, need a lot of data. Have you noticed any progress in opening up or providing more data across Europe and other regions? Kęstutis, maybe you'd like to take that.
Actually, yes, and there are a lot of examples, actually. I still remember it was almost a month ago, maybe, when NASA launched a new hackathon, Space Apps, which was dedicated to COVID crisis and problems, and all the developers and all the teams who participated were using the open data from NASA, and they opened a lot of APIs, and they allowed to access all the data they have. But when it comes to other providers, or for example, now I've already mentioned Google, but Google is becoming a platform, a front end and technological vendor for banks around the world, because they know everything about the customers. And you can, and leveraging this front end and leveraging their AI capabilities, machine learning capabilities, and the knowledge about the customers, you can provide intimate, actually, very hyper-personalized products in the future. So this opening of data is happening from different directions and from different angles, starting from open banking initiative, which is taking momentum in Europe, and ending with additional data like NASA and platformication when we talk about Amazon, Google, and etc. And everywhere is data behind, actually. It's the air for financial institutions and new financial services.
Okay, thanks. Maybe somebody else would like to comment on that? Jesper, Douglas?
Yes, if I may, I think it's a natural. I think it's a natural evolution with the access to more access to data. I think in this consciousness that has been driven in our behavior, through we're basically turning the new limitations into a new minimal living, and with a focus on the positive side of what is really a challenging change. But for the millennials, this is this is normal, and also for millennials, it's it comes with blockchain, the whole open source tendency. I think it's the data openness with the data is natural, and it's really one of the great things that COVID-19 has driven through societies.
Okay, thanks. We have one more question to Vytautas. You mentioned some of the cybersecurity issues and solutions, and the question asks, could you specify some?
So what I meant mainly reflected to the remote work, so it reflected to the virtual private networks infrastructure, especially like enabling the second factor authentication for employees who are logging to the system, as well as the monitoring of the actions of the employees on internal system. So it's more or less about the security measures which most companies and we had before that, but we're not using them at, let's say, the full capacity, because the potential risk was smaller than having like all the employees, especially employees who are working with sensitive data, working remotely. So it's more or less about kind of fixing the infrastructure to its maximum potential. And what I meant by the technology is more or less about having the secure second factor authenticators for remote work, so you actually know that it's your employee who's signing off, not somebody else.
Okay, thanks. Probably that brings us to maybe another interesting topic from regulatory perspective. Of course, there are already a lot of rules and regulations, directives on financial industry, right? But I think this COVID-19 crisis brought up a new or refreshed the question about the, contingency planning, things like, like you mentioned, now working from home and having full access to your systems, and probably that would bring another wave of regulatory, if not new regulations, but then at least checkups on the fintech industry from regulatory perspective. Douglas, would you like to comment on that?
I mean, there's an example of that that came about within just because of the pandemic, and the SCA regulation, or the strong customer authentication regulation that was going to take place back in May. The FCA over in the UK actually delayed it because it was going to put unnecessary security strain on retail businesses in the UK during a time where they've all been told to shut up their bricks and mortar stores. And so, I mean, that's an example of regulatory flexibility that has come about because of the pandemic, whereas it was going to become stricter and have stronger authentication. They've actually decided to postpone it until stores can actually reopen. So I think that's actually quite interesting, where you would assume that the regulations would become stricter. They've actually, they're not going to be relaxed. They're just certainly waiting until the pandemic is over. But I assume that there may be movements in terms of online payments, and you're certainly still, I believe the verdict on whether the transformation from Target to payment over in Europe from the Central Bank of Europe, I think, and SWIFT is going to be made some point this month. So that will be really interesting to see if those payment that changes.
Okay, thanks. Let me take one more question, probably the last question from the audience, and then we will slowly move to the conclusions. So, seems that what we're discussed so far looks kind of positive for the fintech industry. So now we are asked to name what was the negative for the fintechs during this COVID crisis. what was negative impact?
Negative. Well, for example, when we talk about the fintech, when we talk about financial technologies, there are a lot of areas where financial technology, payments, and etc. are embedded into other businesses. For example, in the retail stores, which are available in different countries, or small shops, convenience stores, and etc. When during the lockdown, they lost almost all the customers because they were not able to go online. Even taking into account that, for example, our customer in Finland has more than 1,000 electronic products inside every single store. You can buy physical goods, but also more than 1,000 e-products, like replenishment of iTunes accounts, bill payments, applications for passports, railway tickets, and etc. But when they lost this stream of bypassers in these stores, it was a negative impact actually in technologically advanced retail.
Okay. Any more?
It's just one of the examples.
Any more negative examples?
Well, I mean, backing up that point, I believe... Oh, sorry, Jesper, you go.
Go ahead, Douglas.
Well, I was just backing up that belief, and I think McKinsey's global payment report reported that there will be an 8 to 10% spending decrease worldwide, which I mean is going to dramatically affect obviously lots of retailers, but also a lot of the fintechs that were facilitating these payments, which had become. We often talk about the movement from large batch payments to low value but high volume payments. And obviously, when people aren't paying anymore, that's a significant profit margin that's going to affect not just retailers but fintechs alike.
Okay, thanks.
Yes, and I think the uncertainty was really bad for everybody, also for fintech. Fear paralyzes, and we've seen a lot of delays. We've seen a lot of, in terms of investment, that people just suddenly did not see how the world would evolve, and in a lot of circumstances we have lost negotiations, we've lost opportunities because we did not really know what was going on, in spite of the fact that that the capital is available and people are ready to move because of this uncertainty, both in terms of seller and buyer. Everything just stagnates because of the uncertainty and the fear that that this whole pandemic has generated.
Okay, thank you very much. So now I'd like to do a quick round and ask from all of you some closing remarks. What are your main conclusions and takeaways? Starting with Vytautas.
Yeah, actually, I will also add another one more angle of a fintech and the effect in parallel with COVID, because what we see, especially in the United States, because also another part of fintech is the investments and the apps which allows the retail people to invest. And then we also saw the benefits for people in the US for not having a job, or unemployment benefits, which are even higher than wages. And that's more or less still anecdotal evidence, but I think it will go to actually a new story when people getting their helicopter money, actually even investing in the bankrupt companies and so on. So you are having people without investment knowledge, putting the money back to the stock market. And I think there's going to be also another effect of this pandemic, which we will study probably after 1 year or 2 years. The best example would be the Robinhood users buying the shares in Hertz, which has already bankrupted. So it's something phenomenal, and when the bankrupt company is issuing the shares after the bankruptcy. So it's something also phenomenal, and I think it's also due to the fintech, due to the easy access to the markets. So sometimes it also has a negative effect in general. So I think we're still at the beginning of it, and so I think it's pretty hard to conclude the actual impact for it. But I think it was still, anyway, it was a good stir in the cup when we actually we will come wiser and prepared for even worse conditions.
Okay, thank you. Kęstuti, what's your...
Okay, I would tell that now it was a very good exercise, and especially a very good background now for the future to choose for every fintech and for every new financial institution or financial institution which wants to remain afloat, actually, to choose the right partners, the right tools to move and digitally transform their businesses. Stop talking, but just start doing this. Because if you're not changing, then you will die in the future. And I personally just wait and believe a lot that one day the semantic web and semantic banking, the banking and web with the conscience behind will emerge finally, and we will have this smart web and all the smart and hyper-personalized banking applications and real approach towards me instead of having those just banking products. I want to live my life and just don't think about the banking products. I want to see this embedded invisible banking services, which complements my life.
Okay, so you're hoping for major transformation here.
Yeah, sure.
Okay, thanks. Douglas, what are your final comments and conclusions?
I guess mine are slightly more negative. Basically, I think that in my opinion, the virus has caused a lot of what was going to be collaborative approaches between the fintechs and the large institutions, the banks, has actually been scuttled. I think a lot of banks are going to actually look at trying to maybe work on themselves from the inside, and this might actually might slow down a lot of the more exciting innovation that we were going to have seen, and actually maybe have a more grounded approach over the last, more so than the last couple of years. We might see shrinking from a lot of maybe some of the more successful players that we'd seen really hit quite exciting heights. But hopefully, at the end of the day, it will mean that banking services are more effective, and hopefully, in the long run, it will actually be a positive.
Jesper, what about you? What are your thoughts?
Yes, I think as a conclusion for the innovation and the changes that we've had after this pandemic, I think one of the absolute most positive things that I've seen is that people have for years been discussing and been tired of the hysteria of the traditional stock exchange. And we see now that during this period, capital has actually been invested into alternative asset exchanges. Talking about things that was that was limited to very few people, like fine and rare wine, where you've seen capital being, because of the uncertainty of the pandemic and how are we going to get out of the lockdown? Is this a crisis for a year or is it 5 years? That people were looking to put serious capital into alternative assets, which in good traditional investment strategies maybe before was 2%, 1%. And suddenly what was augmented, where people were taking serious risk and putting long-term commitment to alternative assets and new exchanges in alternative assets for, 5 to 10 years. This is very, very interesting, and I think it's healthy. And I think this lack of trust that is in the traditional stock exchange is just not going to come back immediately. This is a great opportunity for fintech as well.
Thank you very much. So to summarize, I think my main takeaway from this is that maybe we have not seen major innovations, maybe we have not seen new products coming up, but definitely we have seen extension and expansion of fintech market. And that's the main conclusion. So I thank you very much, guys, for being here with us today.
Thank you for having us.
Thank you, Jesper, Douglas, Kęstutis, Vytautas. It's been a pleasure. And good luck. Stay safe. Thank you.
Thank you.
Be good.